India's second largest lender, HDFC Bank, has reported its Q2 earnings and meets the street estimates. Poonam Sane joins us with more details on it. Poonam?
Well, thanks so much for that. In fact, I would say yet another good quarter in turbulent times from HDFC Bank. If you look at the profit growth, the profit growth is pretty much in line with our estimates at 20.6%. 5,000 odd crore is the kind of profit that the bank has reported, led by a good healthy growth in terms of the net interest income, close to around 20 odd percent. Advances growth has been slightly stronger than what we were expecting, nearly around 24 odd percent. We're also seeing a margin expansion of close to around 10 bips to 4.3%. Now, do know that not everybody expected a margin expansion during this quarter. Some did expect some amount of respite on account of the capital raising that the bank has done recently to aid margins. But 10 bips expansion in margins is really good, and management commentary would be really important. Asset quality, I do not really have the breakup as of now, but yes, if I look at the GNPA jump of nearly around 5.5 odd percent and a stable provision cover, more or less, I will call this as a stable asset quality in current turbulent times. Provision cover also has been retained at 70 odd percent, and the bank also mentions that they do have a floating provision considerably to the extent of 1,400 odd crore as of Q2. In fact, on the other hand, if you look at the overall key important parameters, one was the fee income growth that we really wanted to look at. The fee income growth has been fairly strong at nearly around 26 odd percent. The cost to income ratio also has come further down. So I would say these are good results considering the stock is trading at 3.3x levels. I guess management commentary, more clarity in terms of growth ahead as well as asset quality would be fairly important.
Poonam, so do you think that the HDFC Bank performance for this quarter, you could see a similar performance from other private banks as well?
Well, no, not at all, Cheryl. In fact, we might see some amount of varied performance coming in from varied private sector banks, especially if I look at ICICI and Axis Bank. I guess they would still report some amount of higher NPA stress on a QoQ basis. We may see some amount of moderation in stress, though, for them. In terms of a Kotak Bank, well, they are not growing as strongly, but definitely Kotak Bank so far has been able to report decent asset quality, but the profit growth for HDFC Bank definitely does have surpassed Kotak Bank. IndusInd Bank, Cheryl, did report good results during this quarter, so I would put IndusInd as well as HDFC Bank to be reporting good results so far. If I look at the other bit, which is Yes Bank, well, I guess the focus on Yes Bank would be completely in terms of what is the succession plan and who would be the new successor. But for Yes Bank, again, we would be, of course, watching out for the commentary in terms of the divergence report, etc. So yes, I would say still varied results may come out from private sector banking space.
Thank you so much for that, giving us a roundup of the HDFC Bank earnings and also what it looks like for the other banking names also. Staying on with HDFC Bank, Manish Oswal, Senior Research Analyst at PCG Nirmal Bang Securities. Manish, what do you make of the results, and is the margin expansion on the expected lines?
So the margin expansion, basically it's a surprise to me, or even maybe street, because we all know the cost of funds is moving up, and HDFC Bank is also having a 50% of retail book, which is somewhat fixed nature to large extent. So 10 basis point is a only explanation which I find in numbers is they have started very aggressively mobilizing term deposit in March quarter and June quarter, and that now it's replacing the cost of current deposit at a much lower rate, and that is helping them to retain the margin, maybe expanding the margins. So margin expansion is a bit of surprise to me.
What do you make of the asset quality trends? Can this performance sustain, do you think?
So, as we all know, asset quality of HDFC Bank is a function of both the corporate and retail, and the corporate size almost very, very stable over the many quarters. As far as the retail is concerned, there was some debate surrounding SME portfolio and the pain coming SME portfolio, especially post GST. But since the last couple of quarters and this quarter also, they have maintained the asset quality on a gross basis. So I believe the asset quality should sustain, because if there is a pain, there should be some uptrend and the gross NPA number, but which we have not seen in this quarter. So asset quality should sustain at these superior levels in coming quarters also.
Also, the fee income growth is strong. Advances growth also is above estimates. What do you make of these data points for HDFC Bank?
So if you see the last 5 quarters or maybe 7 quarters, the fee income growth of HDFC Bank has been very, very strong compared to peers, even ICICI, Access and IndusInd Bank. In December 27, it grew 30%, March 32%, 23%, June 2018. Now it is hitting the number of 26%. So it is based on the distribution income expanding, and secondly, the loan book growth also very strong. So both the things are helping to show the fee income growth at 26%, which is very strong in the entire private sector banking segment.
Thank you, Manish, for joining us and helping us decode the HDFC Bank numbers.